Thank you for being here, Stephanie. I want to
Yeah.
introduce you to everybody. This is Competitive Edge podcast, strategic thinking, so that small businesses can gain a competitive advantage. So Stephanie here is an amazing financial expert. She's a fractional CFO, 15 years experience with corporate America, nonprofits, and even government contracting. So I am super excited to have you here to help us think financially. I think that probably in order to get a competitive edge, we have to look at our money. We've got to make more than we spend, right?
Yes. And plan it out ahead of time.
That's right. That's right. So thank you so much. I am so excited that you're here. This is going to be awesome, and I'm just really excited about it. And I just kind of want to demystify the financial aspect of small business. So this is part of a series for a one-page business plan. We've done a few episodes about a one-page business plan, and I think that it's very important that before people get into their one-page business plan template, that they take the considerations for the financial aspect of it. So I know that you specialize in helping small to medium-sized businesses, especially ones that are quite complex, and to demystify those kind of things. So I'm wondering if you can, just let us know what is the most overlooked aspect for a small business looking to highlight their business plan. What is the most overlooked aspect financially?
Yeah. So I would say that there's usually a focus on an area that they understand really well, and then they kind of skim over the other areas of a business plan that they might not be as strong in. So for me, usually it's in the financials that I find the most mistakes, but it usually comes around market research. So, really comparing yourselves to others in the industry and figuring out realistically what your business could possibly make based on that.
According to a study by CB Insights, this is 2021, but 70% of all startups fail. And this is due to a lack of planning. And so I think that part of this initial segment is the power of a one-page business plan for strategic clarity. And so to know where you are in the marketplace, and you're talking about the financial side of it for market research. So how do you do market research for financial planning? Is this about profits or what to charge? What kind of market research am I supposed to do? What numbers? What are the key numbers that I'm looking for?
Yeah, so you want to be able to see in your area a little bit of what other people are charging, if location is important. So, for instance, my brother just started a trucking company, and so he looked at other trucking companies in the area and what their rates were. So he already knew that he could be competitive, or at least stay, in line with what other companies were charging for prices. And then, their volume that they currently do, okay, he could predict a certain percentage on that. And then also the expenses, looking at insurances for a trucking company is astronomical. So, he really had to budget in, okay, I need to be able to have the startup costs to start my insurance from day one. And then go forward. So there was calculating the amount of startup costs that he would need, what possible revenue he could generate, and looking at other, possible location specific expenses.
Yeah, I guess that, if you're going to have a business, these are definitely the things that you need to know right off the bat. There's one thing to have an idea. I want to start a food truck. We have a couple of kind of fake businesses sort of that we used during the podcast. One was a pet company and the other one was a auto repair.
Yep.
And so they're similar on a trucking company. Yeah, because you have an idea and you're like, okay, well, I'll have a truck, but there's expenses, there's overhead, maintenance fees, insurances, gasoline, wear and tear, advertising, marketing. So
Yeah.
it's very simple. It's a very simple concept. But if you're not planning it, and then the market research as far as who your competition is, if you've got 10 competitors that have been around for 50 years, that have everything fine-tuned, like for insurances, if you've got a whole fleet, your bills might be a lot less than a guy that owns maybe one truck,
Yep. Definitely the quality aspect.
Yeah.
Knowing who you are and trusting you to show up. My brother was saying he didn't want to start getting contracts with larger insurance companies until he had more than one vehicle, because if he could not fulfill their contracts, they would drop him and then not give him the opportunity going forwards. And so, that was really a barrier for him, knowing that you had to wait not just one truck, but you had to get to the second one to be able to get the better insurance rates as well, and as well as the good contracts. But that, that's a barrier for entry right there that you have to estimate for, because now you have doubled the expenses of the trucks, the gas, the insurance, the overhead, the labor, but if you are paying somebody to be available to drive the truck, you have to pay them hourly, whether they're driving the truck or not. So if you don't get any contracts that day, can you still afford to pay that person and all your other bills?
Yes. And 2/3 of all businesses fail within the first 3 years. So would you say that it's advisable to have working capital for 3 years? Or what's the number there? Is there a figure for that?
I'd say it depends on the industry. I think it's very industry specific, because some don't have a lot of overhead. So starting an accounting business like I had, QuickBooks was probably my biggest cost, and that's an online subscription service. So it's different than a trucking company that has, physical assets. So I'd say it's definitely safe to look out 3 years, but it is really hard to also know what the next 3 years are going to look like as far as income. And, there's always the inevitable something's going to happen. So, being able to project out that far is definitely ideal. If you can't, getting out, a year and a half as far as possible is the goal.
Yeah. I mean, I think one of the things that I really like about your company that you've provided in the past is these actionable checklists. So you'll take a company and you'll take a look and do sort of like, I don't know, an assessment and overall evaluation, and give them exact actionable checklist of what they need to do and how they can shave expenses and increase efficiencies and that kind of thing, that it's very customized. Okay.
Yeah.
So here's a statistic right here. So according to CB Insights in 2021, we already did that one. This is Harvard Business Review. Sorry about that. It shows that entrepreneurs who create a formal business plan are 16% more likely to achieve success than those who don't. However, only about 33% of startups have a written business plan at all. And we keep focusing on a one-page business plan. So there's the power of a one-page business plan, because it keeps it very simple. It helps you maintain focus. And there's a big difference. You have a lot of people that think, well, I've got to make this really huge plan and submit it to the bank so that I can get funding. If you have a streamlined business plan, you're 50% more likely to get funding than those that don't have a business plan or have a complicated business plan. The majority of business failures is because their business plan is too complicated.
Yeah, a short plan is also easier to adjust to market changes, so you can stay flexible and grow. If you have a lot of detail, think of updating that. If it was a pain in the butt to put together the first time, every time you pivot, which as an entrepreneur, if you haven't done it, Christy, you can, talk about this, is you have to pivot constantly. And if you have a lot of different detailed out plans, too detailed, you then have to update all those plans. So keeping it really short and simple helps everyone know what's going on, but also helps you pivot without having to redo all of that planning.
Yeah. So as an example, so for my business, I had a couple of large clients that were high end. They were paying a lot of money, but they don't have the same kind of expectations that some businesses have. And I'm finding with that business model, some of these companies were starting and stopping. We're losing accounts because we're like, oh, okay, let's go after the high ticket item.
Mm-hmm.
And that sounded like a great idea. And we're like, well, okay, there's more profit in that, and we can fund our team and we can fund these processes, but they start and stop. So we're finding like, okay, if you need the service that we were marketing, this is a great service that gives them a lot of results, but it's a long-term approach. And I call it the vending team, the vending machine mentality. A lot of customers think, from my business, I want to just put money in, hit the button, and customers come out the other side. Your marketing and advertising does not work that way. This is a very long-term sustained approach. It doesn't work that way. So they're like, okay, I'm willing to pay a whole bunch of money to get this vending machine result. I'm going to put a bunch of money in. I'm going to have 2/3 of it come out, and they're romancing themselves over these numbers. If this is going to work, doesn't work that way. So I'm finding like, okay, it was really nice to have larger enterprise size clients, but that's why I left the corporate world. It's not working out. So I'm like, okay, I want to go back to much smaller, almost giving away free things, to have less expectations. Let's give them the instant results. And then over long term, because of, I mean, I hate to say it in this way, but I understand the psychographics of some of the customers that they need immediate results, although I'm learning the hard way. So let's put it that way. But, you know, they need to have instant results. So let's give them something free. Here, it works. Here you go. Now, over the course of time, it's like an old building. You put coat of paint on top of coat of paint on top of coat of paint. You know what I mean? And over time, it's got to be maintained. You know, I always try to tell my customers, you know, it's like mowing your lawn. Are you going to mow your lawn one time? No, it's got to be done week in, week out, week in, week out. And it's a maintenance thing, you know?
Same with accounting. You know, people think that they can come to the end of the year with a giant box of receipts still. And you can't do that to first of all, your accountant will turn you away if you show up with those, because those books are not ready. You know, people think that the accounting can just be done year end. It needs to be a constant maintenance item, because, you know, there's subscriptions you're paying for that you forgot about. You know, just met with the client, you know, we're looking through her budget and saying what came through you weren't expecting to come through, you know, and looking at stuff like that, because it needs to constantly be checked and adjusted, just like your marketing. You know, you can't push the button once and expect it to spit out the number of clients, like you said.
That's right. And I think that if you own a small business and you've stumbled onto this podcast, and I think that really is a very good insight to think about. I remember matter of fact, it was my father. So I learned business from my father. He had his own business. And early on in his career, he thought he was going to get this get rich quick idea, and he was going to come up with an idea, and he was going to make a whole bunch of money, and everybody else was going to do the work. That is not how it works either. You've got to get in there. There's no shortcuts. There's no vending machine. It doesn't matter if you have a bunch of money that you can invest in your company and you're going to hit that button. It just doesn't work that way. We all have to stick together. We've got to be able to read the insights. And I think that's really what I really appreciate about you, Stephanie, is that you're like, nope, this can get better. This number can come down one more point. Did you realize that 1 point over the course of 2 years is this much money? Wow, I didn't realize. Well, you have a goal of increasing your assets, and that's how your assets can pay for themselves. So that was great, that type of information that you've been giving, and how you can really give a laser focus clarity on what makes money, what doesn't make money, and these small efficiencies and how they can really benefit. But I think overall, it's a long-term approach. You have to be hands-on. You really are the lifeblood of your business, because your business is you. It's your idea. It's your talent. You're the one that's the business. Your people, your staff, they work for you. It all trickles down from the top.
No one's ever going to work as hard as you do. You know, my dad was also an entrepreneur, and, you know, after employees went home, he still had to work, because if something needs to get finished, you're responsible.
Yeah. And so that's what brings us to this next segment on how to stay flexible in strategic planning. And so basically, it's really what we're discussing, which is regular reviews and adjustments to your business plan. Do you have any case studies or anything that you might be able to share with us?
Yeah. I think, you know, you can start out by trying to prepare for different scenarios. But one that we probably could not have prepared for was COVID. So nobody really expected COVID to shut the world down for 3 years. So I was working with the company at the time, and one of their biggest issues was everyone in the company had spouses that had health insurance, not them. The company didn't provide any, but all of the spouses lost their health insurance. So now the company had to figure out, okay, if they all lost their jobs, the spouses, they needed to figure out how to fill health insurance qualifications for all of their current employees. And so that was something that wasn't in the budget, and not the health insurance part of it, something to figure out all over again. And that was just a scenario that they hadn't prepared for. Another one is things taking so long to get paid, with the world kind of shutting down. People paying you took a little bit longer, and that doesn't mean that your mortgage was due any later, but your accounts receivable definitely slowed down. And sometimes people's companies wiped out and they could never pay you. Thinking that all of the money you're owed you're going to collect is a little delusional as a business owner. Remember, I think if you can say that, Christy, you're not ever going to say that you collect all of the money that you invoice for. It's a good hope and it's a good goal, but you can't expect it, because there are scenarios where that's not going to be the case. Somebody's company has a rough time, or you lose them as a client, and if they were your biggest client, we had this as well, where we had a lot of large clients. And then when one would leave, we'd have a giant gap of work, but also of revenue. So being able to fill that in with some smaller companies made that so that we were able to stay flexible. So, being able to regularly check in with your financials and your business plan and saying, how are we doing? Do I need to pivot? Are there some scenarios that we could run through and see if we could handle them, or if we could do things to mitigate the risks that we're, possibly going to come into, but also opportunities. If, let's say, somebody comes to you tomorrow and they're a big company and it's a big opportunity for you, can you fulfill that? Or are you going to be held back from growth because of, whatever it is?
Wow. Yeah. So actually, you just brought up a point that no one has brought up yet. And that's the amazing reason that you're here. And anybody out there that's having some financial stresses or need to pivot, Stephanie is the one to talk to, because you can get a expert level, high level fractional CFO paid part-time. It's more affordable than you think. She can come in and she can help you pivot, because here's the thing. Everybody that was talking to us about our business plans and about these entrepreneurs didn't tell us to prepare for when people don't pay their bills. Everyone was like, oh, we're going to buy this for $1 and we're going to sell it for $3 and we're going to make a bunch of money and we're going to have to hire these people. And we're thinking about our business plan. That's a very simple thing that we just did not think about. And you're right. I've learned the hard way, okay, to know that I have a certain amount of shrinkage on an annual basis, and I have to prepare for that. I have to work it into, sorry about that. I have to work it into my budgeting. Theft.
Yeah, turnover of employees, turnover of clients, turnover of, just subscriptions you were paying for that now cost a different amount next year. There's constantly changes. You bought a subscription to a really expensive software on a discount the first year. Well, maybe next year they're not going to give you that 40% discount. So, you want to plan for that. But also, like you said, not everyone is going to stay with you forever, as a client. Sometimes that's good. That means they're growing. And sometimes it means they've, gone on to other things. But yeah, they're not going to be around forever, and they are never all going to pay you. Unfortunately.
Right. And then the analytics that you provided as far as, the long-term value of a customer, what is your retention ratio? So these numbers can actually be broken down pretty quickly with an expert. This stuff is easy to them. You can go in there and you say, oh, listen, this is your retention ratio. This is your long-term value of your customer. This is the numbers. This is the mathematical formula that you can just repeat. So even from a marketing point of view, what we've done is we go, okay, well, this is your cost per acquisition. So you know what your profit margin is, what it costs. So once you get those numbers and once you get that clarity, and it's like taking the blinders off, now you're like, wow, now I can just comfortably invest $10,000 because I know what my return on my investment is going to be. A lot of times I'm finding that small businesses, they get hung up in the operations. Well, I got to do this and I got to get to this meeting and I got a bookkeeper. Don't worry, no, this is way different than bookkeeping. Bookkeeping is, look, you got to get your books done, clean. You got to file your taxes at the end of the year. But there's ways of strategizing. There's ways of getting a competitive edge. And this is what this podcast is all about.
Yeah.
So for as a little bit of a bonus, before we wrap up, is we're going to provide, let me see, what do I have it called here? I'm going to look at my notes. This is business plan flexibility checklist. Okay, so it's just a downloadable resource that we've all collaborated on and produced. And it's 10 different steps that are key takeaways and the strategy that every single small business needs to know in order to be able to stay flexible in an environment. And also, this is a little bit of surprise for you, Stephanie, because I was talking to Charlie earlier, and he said that he came up with some really great tax information. We're in fourth quarter. It's at the time of this podcast is mid-November. And so he says, you know what, there's some really great takeaways for people that can show, because that's a lot of businesses want to do, right? Is they want to show more expenses towards the end of the year to reduce their tax liabilities. And then the beginning of the year, they can show more profits. So he's got some secrets that unlock exactly how to do this. It's all detailed step by step in this PDF. And are you willing to give that away for free to the people that see it? I know we're kind of a new podcast, but are you willing to give that out?
Absolutely. We love doing free information because financial literacy we're not gatekeeping. We all need to know.
Good. Good. Okay. So for anybody that wants it, if you want to contact us, you have a question, just let us know. You can reach out. We'll give it to you. There's no, this is YouTube. Everything is free. We're just here to just have a podcast and share some information. So if you have a question, a financial question, a marketing question, just reach out. We'll let you know. And if you want the PDFs, we'll have 2 different PDFs. We'll have the tax information, which are really, this stuff is really great. I know that I'm going to be using that myself. And also the key takeaways, which are 10 steps on a business plan flexibility on how to do continual reviews and to keep your business plan flexible. And this all goes with the other podcasts that we've had about the one-page business plan template. We have some information on how to use AI to create the template. We have some other key takeaway and statistics, but make sure that you look at it kind of holistically, get the free downloads before you do your business plan, and you will literally be 3 times more likely to succeed than people that don't take this information.
Yes, we want you to succeed. Please take our advice and follow the steps and the checklist. Checklists are great. You can always go back to them. We like doing quarterly reviews on things because it's like every few months, you refresh, renew, replan.
And that's how you stay flexible, because if something does come up and you need to pivot, that's it. And I just wanted to point out one more thing. So if there's anybody out there that really has insurances or has a complex business, is like, geez, you know what? Something changed. How can I account for all these things? And they're stuck in the red tape and they're stuck with all these different choices. Just give Stephanie a call. She'll help you through it. She'll give you a free consultation, right?
Yeah, no. And I was going to mention that, speaking of checklists, when you reviewed our website, you specifically went through a checklist of your own of areas to check to review our website and told us things we could improve on. So every area of your business can be improved upon. Your expertise is usually in one area, and then the others are, you had to find the experts to fill in the gaps. So just because you're good in one area, ask for help, find the experts, and, let's all succeed together.
Yeah. And we're here to help. We're here to help you. We're not here to nickel and dime anybody. Just give us a call and we'll just help you out. We're here in Berkshire County. So yeah.
Yes.
Thank you for coming. And I really hope, will you come back?
Absolutely. No, I think that, we're not taught enough financial stuff as individuals. So, we really need the advantage as business owners to really take it to the next level. So I'm happy to come. Yeah.
And if there's anybody that doesn't really want to reach out directly, just leave a comment and then we'll just answer it on the next show. And then we can do it that way if you want to do it that way. But I want to really thank you. Have a nice day.
Perfect. Thank you so much.